Okay, yes, Bajaj Finance was the story of the day, and the impact came through post our exclusive interaction with the management once the earnings were announced. But let's get in another such exclusive interaction for our viewers. Bharat Madan, sorry, who's a group finance controller at Escorts, joins in to discuss their numbers, which were also, by the way, very good. Bharat, it's great to have you on the show. Thanks very much for taking out the time. I particularly want to first start off with the margin performance where you've come in at 12% versus 7% year on year. Is this the new normal for you in terms of trends on the margin front?
Yeah, I think if you look at the last 2 quarters, we have been reporting the numbers margins in this range only. So we think, I think, yes, these are sustainable numbers and probably we should do better next year.
Now, when you say do better next year, are you confident that you will be able to maintain the impact of rising raw material prices?
Yeah, so if you look at the last 1 year numbers, I think overall for the full year, the margins have been in the range of about 10.9% and the EBITDA level, and at EBIT level also it's somewhere around 11%. So I think we're seeing against last year's numbers, we should be able to improve our margins further by roughly 100 basis points. And that takes into account the issues which are coming on account of the material cost increases, the inflation happening there. So I think both put together, I think we are confident. I think the numbers should really look into range of 12% sort of plus into the overall margin.
Okay. Bharat, can you give me a broader sense of where do you think the tractor industry is headed for FY19? You know, the other day we had the management of Mahindra and Mahindra on our show, and I've never seen Rajesh being that optimistic about the tractor demand. What to your mind has changed that in last 12 months the demand and even the demand explosion has been very strong?
And there are 2-3 factors for that. I think if you look at the last 2 years, one obviously the 2 years ago we were looking at the industry going down, so continuously towards years we saw the degrowth happening in the industry. So it started with a low base, and then obviously last 2 years has really brought back the industry level now to a new peak. So, and this also being an election year, and we always expected there will be a lot of subsidy programs which are running from the various state government front. So that will be a precursor to election, which has been a historical trend in the past also. So we've seen almost average 11% growth happens in the year preceding election year. So which is a very normal phenomenon. And some of that, then again, got a good prediction for the normal monsoon, which again should help. So I think all the sentiments are positive, and there's been good demand, world demand really on the ground. And we think this year definitely the momentum will sustain. And I'm not sure about next year what will happen post-election, but I will definitely this year should be a great year for the industry.
My only thing is, Bharat, is when you look at your numbers, they seem very encouraging. The only thing is, are there any risks that one would contest with the impending monsoon that can derail demand, or irrespective of how things pan out, the demand environment, the numbers you think look very strong and intact?
So normally, I think even after the good year of monsoon, the next year normally the water reservoirs are always full and the table is good. So we don't really expect a major change happening on the industry front in the year after a good monsoon. And if you have a good, well spread out monsoon distribution, or the rainfall is equally good, then I think it should also be good for the next year. So I don't think again that the good monsoon this year, the bad monsoon next year will actually impact your FY20 industry to that extent. So we think either demand should sustain. Yes, there will be some pressure on the pricing side, and if the government has to really support on the MSP, so what sort of pricing they offer and what sort of market realizations the farmers really get for the yield. So the output will again going to be equally strong on the productivity side. So that could be one, I think, issue which can remain. Otherwise, we don't expect there will be anything significant which will be adverse to the rural sector. Yes, on construction and railways, which is again more really dependent on the government spending happening. So post-election definitely or pre-election there's a stagnancy on account of the spend levels, then obviously that can have some impact on the demand. But I think going forward, we again expect in the long term, 4-5 years, India stories impact on the infra side as well as the need cases there for railways to grow. So all sectors should continue to do well.
A breakup of the 1436 crore, how much has come from tractors and how much has come from non-agri business?
So tractors again, as I was 79% and 15% this time is from construction business and about 5.5% from railways.
Do you expect that there could be a sizable recovery in the construction business? Because when we speak to some of your counterparts who are in the construction business or construction equipment business, they are very confident because road demand is strong. They are very confident because NHI is rolling out more and more orders. Just like your tractor business came back in FY18, can your construction business come back in FY19?
Yeah, construction has input. If you look at the numbers on the full year basis, construction has given the highest growth on last year in FY18. So we expect, I think, the momentum should continue. So it can actually give you a positive surprise. But as of now, we're expecting the industry growth to be somewhere in 16 to 18% range for next year. But yes, if the sectors can actually give you a very positive surprise.
Does it make for Escorts to stay in the railways business? It's a competitive business. The business is not even 5% of your turnover. It's a business where we know the competitive intensity is only going to increase. So what stops you from, let's say, divesting that business?
Well, I think one of the key reasons is we have been into the railway business for the last 50 years now. And definitely the growth in the railway demand has started coming in only last 3-4 years. And prior to that, for 5-6 years, we had seen actually hardly any order book used to be there. So railway had its own issues and the liquidity. So now with the financial closure happened on various capex programs for railways, so the kind of roadmap which we got from the railway ministry is very strong. So we expect this is one segment where we can actually also grow, so not only organically but also inorganically through expanding our product portfolio. So our aim is to take this business to a sizable level of 1,000 crores plus, which will be a 4-digit number. And definitely the margin in this business will continue to remain the highest for us. So, and that's the momentum we see happening going forward too. So as of now, we don't have any plan really to exit. But yes, like you said, so overall still it will remain a main tractor-dominated portfolio for us. So which will continue to be even in the expanded portfolio, roughly 75% of our total turnover. So these two businesses will remain small, but definitely it will be profitable businesses for us.
The export business is on a low base, but even so, with the currency weakness, do you see competitive advantage of scaling up that business? You're targeting 50% growth in exports, so that could be the factor that aggregates your earnings?
Well, as of now, there's not much dependence on Escorts, so we continue to remain the lowest player actually on the export number. So definitely we see there's a lot of potential there because we've been investing a lot in developing our product portfolio for the international market. And we are also exploring some contract manufacturing opportunities in that space. So definitely in the next 3-4 years, we expect the number should go up to 8,000 to 10,000 tractors per annum, which will become some sizable business to really bank upon. So as of now, and with the currency really becoming favorable for us, the impact will not be really large.
Okay, Bharat, we leave it at that. Thanks very much for taking out the time to speak with us. We really appreciate you sharing details about your earnings. And I think the stock pretty much is telling the story, not just in today's session, but if you put up a period chart, you would know how this one has rewarded investors quite handsomely.